Hi friends, in this video we're going to look at why so few girls and women are investing in the stock market, and we're going to look at how you can invest safely and securely and even outperform the boys. Now, if you're new to this channel, my name is Charlie and I'm an investor based here in the UK, and on Kowalah School we are helping young people and first-time investors to figure out how to start their investing journey safely and securely. And when I think of young investors, I think of my own children, of which 2 are girls. And why is it that they should be less likely to invest in the stock market when the facts show that they're most likely to outperform their brothers? 50% of the population is female, and yet less than a third of those that invest in the stock market are girls and women. So we'll take a look at why that is. I've got 3 reasons why I think girls are less likely to start investing. And then we'll wrap up with why girls actually have such a great advantage over boys when it comes to their long-term investing returns. So let's start by looking at the current situation. There are plenty of surveys that show that women make up a very small percentage of investors in the stock market. Robinhood, which is one of the popular trading apps in the US at the moment, says that only a third of their customers are girls or women. eToro, which is very popular across the UK and Europe, says that just 14% of their customers are female. So it's very, very small. And of those women that do choose to save, the vast majority of them will actually choose to keep their money in cash and cash ISAs rather than investing in the stock market. So why is it that girls are less likely to go investing in the stock market? Well, I think there are 3 main reasons why they're less likely to make that leap, whereas the boys are only too eager to pile in. The first is attitude to risk. Now, it's well known that girls and women have a more conservative attitude to risk. They like to think things through and really want to make sure that they don't lose their hard-won savings. Whereas boys have a much more aggressive attitude. It's get rich or die trying. On Twitter, you'll see them investing with the hashtag YOLO, which stands for you only live once. It's a bit like gambling. Put it all on black and see what happens. Whereas women, rightly, are a lot more reluctant to follow that kind of approach. And unfortunately, seeing what boys do gives investing a bad name. It often gets confused with gambling. We're going to take a punt. We're going to take a flutter. Let's see what happens. You know, if I lose it all, I'll start again. And that is not a message that resonates with women and girls. Now, because of that, girls will often prefer to keep out of the stock market and to keep their money in cash or in a cash ISA because they think that that is going to be safer for them over the long term. But inflation eats away at your savings at around 2% every year. And yet the amount that you'll earn on those cash savings is only about 1% every year. So by trying to be safe, trying to be sensible and keeping your money in cash, you're actually guaranteeing to lose the purchasing power of your money over time. How about that for high risk? If you had put your money into an index tracker fund, such as the S&P 500, the 500 biggest companies in America, over any 20-year period in the last 100 years, you would have been guaranteed to make a profit. And on average, you would have made around 7% every year. Now, how about that for low risk? Now, the second reason that I think girls are less likely to start investing is the lack of any role models. When I started on this investing journey, I read a lot of books. I read books about Warren Buffett, a man. I read the Investing Bible by Benjamin Graham, a man. I read books by Peter Lynch about funds run by men like Terry Smith, funds that failed by men like Neil Woodford. Men. You have to look very, very hard to find education and advice that is aimed at girls and women. And when you then start looking on social sites like Twitter, FinTwit, as it's called, is a very common place to go and find information and advice on stock trading and fund trading, and yet pretty much every single person you're going to find and follow is going to be a man. Therefore, it's really difficult for a young girl that is getting into this world to really find meaningful role models to follow, and that further exacerbates the problem. And the third reason comes down to the massive range of funds and stocks that you can invest in and the time taken to learn about what to invest in. Now you might say, why is that different for boys as it is for girls? Because everyone's got the same 24 hours in a day. And I think really it comes down to the first 2 points, attitude to risk and lack of role models. If you're a guy and you really have a high attitude to risk, then you're going to spend a lot of time figuring out what to invest in and taking a few punts, even if you don't have all the information at hand. And secondly, you can read books and you can go online and you can find all of these people that are similar to you doing the same thing, providing you with hot stock picks and encouraging you on your journey. Whereas if you're a girl and you've got a low attitude to risk, then actually it becomes a vicious cycle whereby you haven't got any accurate role models to follow. You therefore don't learn. It there becomes too overwhelming to pick which fund or share to invest in. And it continues. Lack of knowledge creates lack of investment. Lack of investment creates lack of learning and further knowledge. It's a vicious cycle that repeats and repeats. So there we have the 3 main reasons why I think girls are less likely to start investing. One is their attitude to risk, a more conservative approach and a very real fear of losing their money. Number 2, a lack of good role models encouraging them on this journey. And thirdly, just a lack of time spent on investing creates this vicious cycle that continues through generations. But now let's look at some of the positives. The fact is, things are getting better. There are more girls investing today than there were last year. Robinhood, the US trading app, says that 1/3 of their users this year are female, but last year it was only 20%. So it's definitely increasing. And part of that, I think, is because of this prevalence of these new online and mobile apps for trading. They're making it a lot more approachable for young girls to start investing. Whereas 10 years ago, you'd have had to ring up a stuffy male broker in order to place your trades. And the secret is that when girls do start investing, they're actually more successful than the boys. A report by the UK trading platform Hargreaves Lansdown showed that between 2014 and 2017, women outperformed men by 0.81%. If that's extrapolated over 30 years, that ends up with the ladies having an extra 30% in their portfolio over the boys. And the reason that the girls are able to outperform the boys is exactly because of their different attitude to risk. Boys make the same mistakes over and over again, and it's all because of that YOLO, you only live once attitude. Boys often put far too much money into 1 or 2 hot stocks that they've been told about by a friend. Boys are often following the market by finding out what everyone else is doing and jumping on too late. Boys are often buying and selling, over trading way too much and coming out of great stocks just before they have their great success. Boys are easily tempted into highly aggressive strategies using options, trading with money that they absolutely don't have. And generally, they just take too many risks. They're prepared to bet and put all on black and risk losing it all. And in the end, that can often be the outcome. Whereas if girls invest in 1 or 2 index funds, they can actually avoid all of those mistakes that the boys are making. They can instantly be diversified across a wide range of hundreds or thousands of different companies, limiting the risk that one of those could damage their important savings. Girls don't need to ask for hot stocks from friends because by investing in an index fund, they already own the whole of the market. They don't need to overtrade because they don't need to buy and sell individual stocks because they own all of the market. And girls don't need to spend 3 hours a day sitting on their apps, buying and selling, and looking at what's going on, because they're invested in the whole of the market. They can get on with focusing on their lives and just watch the gains compound over the months and the years. So if you're a girl who has been nervous about investing in the stock market, then I would urge you to think again. You really have a great opportunity to outperform the boys by avoiding their risky "you only live once" strategy. Investing in an index fund will help you to outperform any cash savings that you might have over the long term. It really is the least risky strategy for you to keep hold of your important savings. Now, getting started is really, really simple. You could be up and running in half an hour. Watch a couple of our other videos. We've recorded a video on how to choose an investment platform. That's a really important place to get started. And then we've recorded other videos on how to choose your first index fund. If you do nothing, just take £100 to invest in an index fund and leave it there and watch that grow. That will help you to learn. It will help you to understand how, through an index fund, you can invest in some of the world-leading companies that are available. So get started. You could be up and running in half an hour. If you found this video useful, please do share with your friends and click to subscribe, as we've got more great content coming through about index funds and about how you can start your investing journey. Thank you very much and enjoy.